Good morning, everybody, and welcome to all right, everybody, welcome to Option Pit. This is the home of option education and volatility trading. This is Andrew Giovinazzi, Chief Operating Officer of OptionPit.com. We might have space for one at our Pro Trader Summit, but that's about it. We've looked for about 15. That's what we've got, but give or take, we could probably handle one more. But the big event really is calendar spread trading this Saturday. If you want a little taste, check out the free webinar we did, but we'll go into a lot more detail on kind of the ins and outs of calendar trading and really where how you really can expect to make some money. You got to have the right you have to have the right mindset when you go into it. Okay, and that's what we'll work on. All right, now with that, here to the VIX. Not doing so well today. Why? Well, Greece. Looks like they have a deal. Here's our market trying to fight and get up to that very close again to the all-time highs. I don't think we're very far away, right? Volatility futures are back into what I would call, after all of that last week, a totally normal contango. About a buck over on the July. Looking at the VIX monthly, that's already 14% vol. 2 points over now on the old calculation. So you've got about normal contango. Not very good for products like VXX or UVXY, where they slowly degrade. XIV will start to do a little better. What am I looking for? I'm actually kind of starting to think of this. I'm trying to think of, again, what kind of good news we could have, right? Is the news going to get better? Probably not, right? Probably not. I don't see how the news is really getting better. So what I'll be looking at for kind of short delta, short volatility trades today, seeing depending on how the day goes out. I just don't see how things are going to look a whole lot better. And, be mindful if you have some aggressive short volatility positions, you might want to think of trimming some today. You've had a good couple of days, so don't forget you got to take profits in those at some point. But for right now, that's what, there's still room for volatility at the money to fall. So just as a reminder, what are some of the numbers that we've seen this year? We've seen the 10 handle and the 9 handle for the very short term vol. I don't think we're going to get there this week, but, earnings are coming out. They're going to start to print. If they're okay, even marginally okay, you could see some really low levels here. Anything goes wrong in Greece, or believe me, the China thing could blow up again. The Z put could not work, or people would start to take the rally and start to kill things. So, don't forget that some things they could turn around. But as of right now, China looks like it's stabilizing, but if you think about it, I'm just using the FXI, it's still all of the domestic Chinese stock markets are still pretty expensive, okay? It's not as bad as the Japanese bubble like in, 1990, but it's still, this is the market. If you want to see volatility come back in our market, keep an eye on this one, right? I don't think this is dead anywhere yet. Now the vol continues to go down, but I think it's going to behoove us to look at some plays here, because I don't think the movement in this market is totally dead yet. Right? We had some ideas in the strategy that we talked about last week, worked out pretty good, but just because there's not volatility in it right now, if everything goes fine, we should all see it compress. But if things start to fall apart again, just a little bit, you can see all these numbers start to bounce. Right? Vol can bounce, and the FXI, there's nothing keeping it. Now that they've done one level of intervention, the second one remember, if you think back when there's intervention, um, the next interventions tend to have to be bigger and costlier and a little nastier. If you look at what's happened from the 90s, you started with like the Mexican peso crisis. Then you had, Russia, and then the Asian economies when you had kind of the hot money flow issues. And I don't know if it caused the financial crisis, but that put idea, right, it tends to make people a little complacent. Right now, you might see that again. So, I think a drawdown the next time is going to be more severe, right? If it happens, which of course, no guarantee. But that's what I would, again, some kind of black swan type position to compare is probably not a bad thing. All right. That's what we got. That's what we're going to look for. We're going to look for, really what I want is I want to try to produce data positive positions with black swan potential. That's what I want to do. Do earnings. Okay. But again, we need some good news to go higher because it isn't coming from interest rates. It's not really coming from the government here. We need great earnings to go higher. All right. All right, everybody. Have a good day, and I will see you all in the chat room and through at Option Pit.